November brought one of the clearest shifts we've seen all year in both Winnipeg and surrounding communities. Sales slowed, pricing softened, buyers took a noticeable step back. From the outside, it can feel like the market is suddenly harder to read. Is it cooling, flattening, or just moving into normal late fall rhythm? When we actually dig into the numbers, the story is much deeper than it feels. So let's break down exactly what happened in November and what it really means if you're thinking about selling in 2026. Detached homes are still the backbone of the market, making up close to 70% of all MLS sales. In November, there were 630 detached sales across the market, down from 677 from November of 2024. The average detached price came in at $420,000 compared to $434,000 last year. It's a modest pullback, not a collapse. What it really shows is that buyers are still out there writing offers, but they are more price sensitive and less willing to stretch beyond what feels reasonable. If you're a seller, this is a shift you actually feel. Strong activity when the home is priced in line with the market, and almost immediate resistance if the price is even a little bit too aggressive. Zooming out to year-to-date results gives us the real context from January through November. There have been over 9,800 detached sales, up from just over 9,500 from the same time last year. The average detached price sits at $451,000 compared to just under $424,000 back in 2024. Even though November on its own was softer, the bigger story for 2025 is that detached homes have held up very well and overall are still trading at higher prices than last year. This is why relying on one single monthly stat can be a little misleading. November feels slower, but the year as a whole still reflects a stable, resilient, detached market. For sellers, that means there is still a solid foundation underneath the month-to-month noise. Hi, I'm Justin Sinkowski with Royal LePage Prime Real Estate, and this is the Winnipeg surrounding areas market update for November 2025. Every month I walk you through what's really going on in the whole market, not just for Winnipeg as a whole, but for communities around the perimeter, the Interlake. The goal is to give enough clarity so that when you decide to move, you're making decisions based on the data, not guesswork or the headlines. Even if you've been wondering whether it still makes sense to sell in this environment, by the end of this update, you'll have a much clearer sense of where opportunities are and what kind of market you'd be walking into. If you'd like to book a call and talk about your home's current market value, I've put a link in the description below to do so. Now, across all MLS property types in November, there was 935 sales, down from 1,039 in November of 2024. The average sale price across everything, which includes detached, attached, and condos, landed over 373,000 compared to around 380,000 a year ago. Categories combined. Year to date, all MLS categories combined show a stronger picture than November alone. There have been 14,431 sales so far in 2025. That's up from about 13,845 over the same time in 2024. The average sale price across all property types year to date is just over $400,000 compared to around $380,000 last year. So even though November itself took a softer month, when you compare it to last year's November, the full year trend is still one of the steady growth and stability. Condos recorded 129 sales in November. That's down from 152 of November of last year. That's a noticeable drop in volume, but the pricing side tells a different story. The average condo sales price came in at $272,000, up from $256,000 in 2024. That's a healthy increase. It reflects the role condos continue to play in our market. They are affordable. When detached and attached prices move up, more buyers start looking seriously at condos as a long-term option, just not a stepping stone. For condo sellers, the message is encouraging. Even with fewer transactions this month, prices are holding and in many cases improving year over year. Your segment is still attracting buyers who want to own but don't want the carrying costs of a large home. Attached homes had a quiet, very stable November. There were 77 attached sales this month, down from 85 last year. The average attached price is just about $357,000, almost identical to last year's price. Stability tells you exactly who this segment is serving. Buyers who want balance between space and affordability, downsizers who don't want maintenance of a detached home. If you own an attached home, your segment is not seeing the same kind of price fluctuation as detached, but it is just as sensitive to value. Well-presented, well-priced attached listings are still getting solid attention, while those trying to push into detached price territories. Right now, the overall absorption rate is sitting about 3.3 months of inventory. Absorption rate is a simple but powerful concept. It measures how long it would take to sell all the current listings if no new listings came to market and sales continued at the same pace. Under 3 months is usually a seller's market. Over 5-6 months is considered a buyer's market. So just at over 3.3 months of inventory, we're at a balanced market, leaning slightly towards slower conditions. Homes are still selling, but buyers have enough choice that they can negotiate and take their time. For you as a seller, that means the market will not simply bail out an overpriced listing. Strategy and positioning now matter far more than luck or timing. One of the clearest signs that the market has shifted from hot to balanced is the list to sale price breakdown. In November, about 32% of detached homes sold over list price, almost 8% sold right at list price, and about 60% sold under asking price, which means 6 out of 10 sales had to negotiate below their original list price to get the deal done. It doesn't mean the sky is falling, it means the market has moved back to fundamentals. Pricing too high out of the gate and hoping the market catches up is not working the way it might have a year or two ago, or even in the springtime. Homes that are positioned correctly for their neighborhood, condition, and price bracket are still getting strong offers, sometimes even over asking. The ones that reach too far above the believable price are the ones where buyers move on and wait for reductions. Inside the city, detached activity remained relatively strong. There was 439 detached sales in November, actually up about 1% compared to last year, with an average price of around $429,000. While the average price is down about 2% year over year, it is approximately 6% higher than the 5-year average. This shows Winnipeg has a more stable and predictable segment of the market, especially compared to the surrounding areas. In the surrounding areas we track, such as Selkirk, St. Andrews, East and West St. Paul, Oak Bank, Oak Bluff, and Headingley, there were 81 detached sales with an average price of about $502,000. That's down from $535,000 last year. Around the perimeter, we also saw an average sale to list ratio of about 98% and an average days on market of about 31. What does that mean? Inside Winnipeg, buyers are still paying a solid premium for established neighborhoods, schools, shorter communities, and in the surrounding areas, buyers are getting more house or more land, but they've also been a little more sensitive to value. That's why the average price is off from last year, even while the sales to list ratio remains strong. If you're watching from the Stonewall, Toulon, Winnipeg Beach, Gimli, Arborg areas, or anywhere in the Interlake, your market performs differently than both Winnipeg and the perimeter. I'll be doing a separate Interlake market update that dives into those specific towns. This chart shows where active residential detached listings are sitting by price range across the market in November. It really highlights how inventory is spread across the full pricing spectrum, from entry-level homes through luxury properties. At the top end, the highest list price on the market in November reached $5.8 million range, showing just how wide the pricing range is across Manitoba right now. And at the lower end, inventory under $300,000 is much tighter, and those homes are selling faster even as the overall market slows down seasonally. As you move up the price ladder, days on market increase, especially over the $750,000 price range, where buyers are more selective and negotiations become more common. The takeaway here isn't just inventory, it's expectations. The higher the price range, the more important pricing strategy, presentation, and patience become in today's market. When you look at where detached buyers are actually writing offers, two price ranges clearly dominated in November. The $300,000 to $400,000 saw 155 sales, which is about 25% of all detached activity. And next was the 400 to 500 range. It saw another 137 sales, or about 22% of the detached market. So together, those two brackets make up almost half of all the detached transactions. This is the heart of the market right now. These are the price points where buyers feel they're still getting a reasonable value for their money, and where financing, income, and lifestyle all line up. If your home sits in one of those price ranges and is priced and presented well, you can still expect solid activity, even a slower month like November. On the neighborhood level, a few areas really stood out. East Kildonan led the way with detached sales in November with 20, an average sale price of about $318,000. That was closely followed by St. Vital, River Park South, and River Grove, with each 16 sales per area. These are the communities that consistently show up in the monthly stats because they offer a mix of affordability, family-friendly layouts, and access to amenities that buyers are prioritizing right now. Across the Winnipeg Regional Real Estate Board, we saw 12 homes sell over $1 million, with the highest sale price closing at just over $2.2 million. It tells you the upper end of the market hasn't disappeared, it's just more focused. When a property is unique, well located, and properly priced, there are buyers ready to step in, even at the very top of the price range. This regional breakdown really drives home the idea that there is no single Winnipeg market. According to the latest Winnipeg Regional Real Estate Board numbers, rural municipalities around the city are averaging roughly $431,000. In the Northeast, the average is closer to $406,000, while the West comes in around $352,000. On the higher end, Southwest Winnipeg is averaging about $592,000, and in the Southeast is almost $500,000. And those are big differences. A detached home in Southwest Winnipeg is playing in a completely different price environment than the ones in the West or the North. So when you're thinking about selling, citywide averages will range. What really matters is your micro market, your area, your house type, and your specific price range. If you're looking at all of this and thinking, what does this actually mean for my place? That's exactly the right question to be asking. Every area, every price bracket is telling its own story right now. Winnipeg and the surrounding areas are behaving differently. The Interlake has its own trends, and even within the city, Southwest, West, North, and established family neighborhoods are all moving at different speeds and different price points. If you're planning a move in 2026, the best next step is to get some clarity around your own home, what it would realistically sell for in this market, how long it might take, and what kind of buyer you likely be talking to. If you'd like that kind of breakdown, you can request a home evaluation, the link below, and I'll walk you through the numbers specifically to your situation so you can decide if and when it makes sense to move. Thank you, and we'll see you next month.